Hello, China Watchers, and welcome to another episode of Silk Celluloid, your thread to the Middle Kingdom. I'm your host, Ryan Carroll. Now, several of our silkcelluloid.com China Watchers kept asking us what we thought about Tencent Music's recent initial public offering on the New York Stock Exchange. So, by popular demand, we decided to upload our second episode of the podcast early, but this does not mean that we are moving in a direction to have more podcasts than on a bi-monthly basis, but we're not restricting ourselves to a bi-monthly basis. So getting on with the podcast, Tencent Music Entertainment had its listing just this month of December 2018. Now, this is a month that typically does not see many, if any at all, major IPOs. And this is due to the winding down of the financial year, a time where many investors, shareholders, corporations tend to go quiet. This is primarily due to the ending of the fiscal year for most, and a time where individuals or companies with large assets tend to assess if their capital maneuverings will be placed under this fiscal year or next. Now, this is largely motivated here in the US by taxes, but sometimes, depending on the size of the investor or corporation, it can be due to their assets or their divisions among their holdings. Now, Tencent Holding, the parent company of Tencent Music Entertainment, decided to move forward with this listing at the very end of this year for its spun-off music streaming service division. The choice of listing the company in December of 2018 actually may be due more to the Chinese fiscal year, which follows the Chinese lunar calendar, than the Western calendar that we normally think about. Now, this year, or actually it will be next year, on February 5th of 2019, will be the Chinese New Year, also referred to as the Chunjie or the Spring Festival. Now, Tencent Music's listing ended up raising 1.1 billion US dollars, and that was listed at a price of $13 per share, which was actually on the low end of the pricing range that they had for Tencent Music Entertainment. And it was originally supposed to be listed back in October, and if it was able to go ahead with the listing in October, people were actually predicting that it was going to be traded on the higher end of its shares at $15. Now, the reason for Tencent Music backing off its original plan to list on the New York Stock Exchange in October was due to a series of factors. Mainly the ridiculous Donald Trump trade war with China. There was also market turmoil, and it was a semi-volatile year this last year for Chinese IPOs listing worldwide, not just on the NASDAQ, the New York Stock Exchange, but also in areas like Hong Kong. I actually expected Tencent Music to list on the Hong Kong Stock Exchange when it was rumored back at the end of 2017 and follow the successful footsteps of the listing of another spun-off division of Tencent Holding, Tencent Literature, that was raised 1.1 billion US dollars back in November of 2017, the exact same amount we saw just a week ago, a little over a week ago, with Tencent Music on the New York Stock Exchange. But what should have been a phenomenal year for the Hong Kong Stock Exchange has turned into one of the worst in recent memories. It has not fared as well as they thought, especially since they changed some of the regulations on the Hong Kong Stock Exchange to make it more favorable for listing. They were doing they recently this year just passed a dual share regulation, which is a little outside of what we're talking about here, but do check out our article on Tencent Literature to learn a little bit more about it on silkcelluloid.com. Now, Tencent Music's billion-dollar raise has placed it at a valuation of $23.3 billion, a valuation that, in my opinion, is only going to increase as, unlike Spotify, basically the international version, or what you would kind of consider Tencent Music to be if you would compare it to a Western counterpart. Tencent Music is actually profitable, and it has been profitable for over a year before its IPO listing. Now, if Tencent Music would have listed back in October at the higher end of its share range, it was actually pegged for a valuation of $30 billion. That was underwritten by Goldman Sachs and Morgan Stanley, which would have put it at Spotify's market cap, which is around 30 billion US dollars itself. But unlike the high end of trading per share of $15 for Tencent Music Entertainment, Spotify, I think, was trading for $122 per share. So you see there's quite a large discrepancy between these two very similar companies. Now, an interesting thing to note is that Tencent Music and Spotify actually did a share swap just before Spotify's own IPO earlier this year. So that means that neither company actually invested capital into the other one. What they did is Spotify actually took a 9% stake in Tencent Music Entertainment, while giving in return a 7.5% stake of the Swedish-owned Spotify back to Tencent Music in this swap. Now, this ownership swap was strategic for both companies and allowed for both streaming companies to reach into each other's marketplace. Spotify is not available in China into the closed streaming ecosystem. So Spotify has now got an arm or a leg, however you want to put it, into the Chinese streaming ecosystem via Tencent Music Entertainment. And Tencent Music now has a outreach of international presence outside of areas like Southeast Asia, in particular here in the West, where Chinese companies have had difficulties penetrating for a host of reasons, primarily just because they try to enter into the United States and other Western markets as if they're entering into the Chinese market. They don't really adjust very well. And we've seen other companies like Leiko fail spectacularly trying to enter into the US North American market. Now, moving on to why you should be watching Tencent Music's post-IPO run is because, as I mentioned earlier, unlike Spotify, Tencent Music is already profitable. It generated about $290 million in profits. That's net profits in 2017. And in the first half of 2018, it saw a 92% year-on-year growth, which is spectacular. Now, over the same time period of 2017, where Tencent Music brought in nearly $300 million in profits, Spotify actually posted a $1.4 billion net loss. That means Spotify has not made a profit as of yet, even though it is the leading streaming music company in the world. And the reason why Tencent Music Entertainment was able to achieve profitability is because Tencent Music has over 800 million monthly active users across 4 apps. And these 4 apps are the top 4 streaming music apps in China. And overall, they represent 23.3 million paid users. So out of 800 million monthly active users, Tencent Music and its 4 primary apps actually have 23 million people paying for the services. And now that's compared to Spotify's 200 million monthly active users worldwide, but they have 83 million subscribers, paid users. And this really is how we see a difference in the structure between these Chinese streaming companies and a Western streaming company, whether it be Spotify or Netflix. Netflix is all about how many monthly subscribers does it have. But over in China, its counterparts are not exactly marked that way when you're looking at them, and you should not make these kind of direct comparisons using that standard Western or American streaming model. Now, as I said, Tencent Music operates the top 4 music streaming apps in China, and those apps are QQ Music, market leader. We also have Kuguo, which is very similar to QQ Music, Kuwo, which is very much heavily relied on live streaming, and WeSing. Now, WeSing is the one to kind of pay attention to. WeSing is a karaoke app that is linked directly to Tencent's WeChat, also known as Weixin in China. WeChat is the largest social media app in the world. It's got 1.1 billion registered users, and you're talking about 900 million users are on it basically daily. Now, WeSing itself actually has 460 million users. So WeSing has 460 million users, monthly active users, and along with QQ Music, these two appear to be the driving force behind Tencent Music's revenue streams. As a majority of Tencent Music profits, like I said, are not generated through those 23.3 million paid subscribers, but they're generated through virtual gifts that users give to other user performers on platforms like WeSing that they like to watch. So basically what this means is you have a WeSing is a karaoke streaming service. So you have, let's just say, girls as examples who will actually pick songs and they will go live, to their fan base, and they will sing the karaoke songs. The users, the top users, fans might actually request them to sing certain songs, and in return, these fans actually provide them with virtual gifts. And these virtual gifts are not just like them sending them chocolates or flowers, but literally actually sending them cash, sending them money. And then Tencent Music takes a small piece of that. Now, beyond WeSing's popular karaoke streaming app, the other interactive apps, and these are all interactive. So you have the user performer, and then the user viewer interacting with one another, and they're often exchanging these visual gifts for some kind of monetary value. So these other interactive apps, QQ Music, Kuguo, I don't think I'm really saying that as properly as I should be. They all provide some kind of digital streaming service, whether it be live concerts, where the users will actually pay to be able to view the concert live via the apps. You have DJ mixes, which are those user performers. Yet again, you have sing-offs where friends could sing off with other friends and they don't have to be actually in the same location. And these apps provide music recommendations. So it will recommend music that you might like based on what you have done before via the Tencent Music streaming algorithms. Now, live streaming is a growing sector in China. I most likely will be talking more about this in the future. When I do that, I may be inviting a guest on, a special guest, or even do just an interview, because I am not a foremost expert in this, but I know someone who is. Now, this, like I said, live streaming is a growing sector in China, and users sending virtual gifts to the influencers, another way to refer to these user performers that they admire. Now, these are both segments that are not going to be slowing down in this next year or probably in the year to come. And we may be even seeing growth within either or both of these sectors. And virtual gift giving is not very common here in the West, but it does exist. So there is some forms of virtual gift giving for influencers or streamers here in the West. probably a little more in the lines of live game streamers on platforms like Twitch. Uh, it's a little unsure how common this will become, if it's going to be something we're going to see that has growth here in the West, but in China, it is a, a solidified part of live streaming and Tencent Music's monetary exchange and monetary growth. And I'm not talking about like small amounts of cash. I'm talking about some of these user viewers can be giving tens of thousands of renminbi at one time as a tip. Sorry, I'm doing air quotes. I know I'm on a podcast. They could be giving tens of thousands of renminbi to popular WeSing performers. And typically, to be honest, these are most likely probably beautiful girls who are receiving these gifts from older businessmen, uh, lonelier young men who have a job that makes a decent salary per month, or they're being received from what are known as fuardai. Now, fuardai are basically the children of the nouveau riche. So these are kids who have grown up under parents who have become exponentially wealthy in China in the last 2 decades or 3 decades of growth. And basically, the reason why I want to point out the fuardai, these kids of the nouveau riche, in giving gifts is because it's more along the lines of a competition. It's more along the line of showing face to say, hey, look, this pretty girl over here on WeSing, I gave her X amount of renminbi just because I can. Not because they might like them, but because they want to show that they can spend more money than their other fuardai friends. Now, getting back to Tencent Music, with Tencent Music Entertainment operating 4 out of the 5 music apps in China that have over 80 million monthly active users, that means the 6 biggest music app, and everything below that currently have under 80 million monthly active users. So these top 4 music streaming apps from Tencent Music really do dominate the market. As I said, WeSing has 460 million monthly active users from the end of this year. So this means the room of growth in streaming music overall, not just with Tencent Music Entertainment, but we really should be watching out for Tencent Music Entertainment because of its connected ecosystem via QQ and WeChat. I don't think we've seen the capacity of growth for this particular market. Now, do check out our other article on silkcelluloid.com that examines NetEase Cloud Music's exclusive copyright licensing agreement with Sony Music. And this licensing agreement is actually for Japanese anime music. It's for the streaming rights of Japanese anime music throughout China. And it really shows you that the Chinese anime and comic book market, the ACGN market, or Arsuyuan, is incredibly important. We focus a lot on this market on silkcelluloid.com, and we definitely will be having more podcasts that really take a deep dive into it. If you're kind of interested in learning about kind of an overview, I did a panel lecture back at the end of September, and the audio and slide presentation for that is up on our Silk Celluloid YouTube channel. So do find us across social media, not just here on the podcast and at silkcelluloid.com. And as a note for anybody who is interested, Tencent Music Entertainment's ticker abbreviation on the New York Stock Exchange is TME, not Tim, TME. And its parent company, Tencent Holding, is traded under TCEHY. That's TCEHY, also on the New York Stock Exchange. Now, this wraps up our podcast from silkcelluloid.com. So until next time, stay tuned, China Watchers. I'm your host, Ryan Carroll.